My content is intended to be used and must be used for educational purposes only. It is very important to do your own analysis before making any investment based on your own personal circumstances. You should take independent financial advice from a professional in connection with or independently research any information you find from my videos that you wish to rely upon, whether for the purpose of making an investment decision or otherwise. All right, we got March 18th. It is a Monday. We were watching Moderna, Monster, MCHP, and QCOM coming into today. We did end up taking Moderna, and then we ended up sitting out on the rest of them. So I'm going to be going through what I saw from those four today, and then I'm going to go through other positions that I'm looking to get into for the coming rest of the week. So that is the plan for today. We're going to start with Moderna, but I want to quickly highlight this little box. This is what I'm going to be including on the rest of my swing trades going forward. I think in the last video, I highlighted, I basically just decided to game plan and lay out my whole strategy from top to bottom. So we had my entry strategy, position sizing, contract selection, exit strategy, risk management strategy, and then my actual trading strategy. So I highlighted that more in depth on Sunday yesterday, March 17th. So if you wanted a little more in depth, I talked about that for like 7 minutes in yesterday's video. So, but basically I just want to show that I'm going to be including this box from now on. So I think that just basically is going to help with following trades and getting an actual idea of how I trade. And yeah, so we got our current unit size right here is 1 unit. So our date of entry is today, March 18th. We did just enter Moderna today. Unit size defined, so that's my position sizing right there. So it's 1% of the account balance or approximate. I mean, of course you want to say 1%, but some of the premiums and some of the positions that you're going to be entering isn't obviously always going to be exactly 1% of your account balance. So that's kind of an approximate level right there. Current contract selection. So my current contracts are June 21st expiration. My entry today was the gap fill at 103.85. The initial stop is going to be 99.44, and then my adding level. So I'll backtrack right there. So why is 99.44 my stop? Well, specifically, we had our rejection right here at the 99.44 level. We flagged down back into it, and then we finally broke above. So I would not want to see price close back below that 99.44 level right there. So that is why 99.44 is my stop, and why it is also a break and retest, but I could get into that in a little bit. Adding level, so where I'm going to add is a break of this 112. So break of 112 is going to be my current resistance, just because we are trading within 112 and 99. So that's where price is kind of consolidating. So the break of the first resistance. So I'd be looking for some kind of break. Let's say we test 118, and then on the retest of 112, because we most likely will retest, this will be my adding zone for another unit of size if I wanted to do so. That is the plan for the adding level. The trailing stop, so when and if price does break this 112, the trailing stop will become the 9 EMA. So I got my 9 EMA right here. Or it'll be a break of structure, and I'll get into the break of structure a little later on. Don't want to cover that yet. So, and then risk-free position. So if this position does ever get to 50% or more in profits, I'm going to be closing and then using the 50%. So taking all initial capital out and then using the additional or remaining 50% profits to enter into a new trade. That way it is a risk-free position going forward. So I'm going to be including this box on all trades going forward. And I think that just helps with following what I'm doing and or education, really. I think it helps. I mean, it helps me. It helps probably the viewers. So I think that is the plan from now on. But let's get into Moderna. So I covered Moderna on Sunday and why I liked Moderna. So this is a break and retest trade. So I'm going to define break and retest right now. So when I'm saying break and retest, we can even do it on the 4-hour. It is specifically, you can look here on the break and retest. So here's your rejection. Here's rejection 1. Here's your rejection number 2. There's your rejection. So you have your rejections of this level. So it clearly could not get over 99.44 on February 28th and on February 24th. And then we had our high volume break. So there's your break right here. Here's specifically on Friday, March 8th, your first break of this supply zone. So that supply zone is now going to turn to new demand now that we've had a break. So your break and retest. So here's your break above supply, there's your break, and then always on a break you want to see high volume. Since we are clearing a supply zone, a low volume break is always indicative of a fake breakout or a rejected breakout. So whenever we see a break of supply zone, so here's your supply back here, we can even extend this, here's your supply, so clearly a big level. If we break supply, I'd always want to see a break on volume. So, and then subsequently, if we ever see a pullback, I would not want to see, I'd want to see a low volume pullback, and usually the low volume pullback signifies it is pretty much just profit taking. There's no actual institutional moves out of the markup phase that this is likely in. So I'd like to see some kind of profit taking, your low volume sell off. So here's your high volume buying paired with your low volume sell off, and then the highest volume that we've had in the last 5 days has been this green candle that retested demand right here. So that is good to see. If we did see a high volume sell off, then that means institutions are participating in the sell off, and I don't necessarily want to be longing when they're doing that. So why is it essentially a break and retest? Well, here's your break. So specifically 99.44 right here, that's going to be my stop. So I do like the SR flip. Basically, I think I trade the best when I see SR flips, just because I think SR flips give me a really solid level basically to risk off of. So again, when we have that resistance, think of it as your ceiling. So ceiling, let's see if I can make my hand flat. So there's your ceiling, there's your resistance. Price is trading just below it. If price eventually gets above it, if price eventually comes back down to that ceiling, it'll find support and go higher. So you got to think of like a 2-story building or something. Let's say you're on the 2nd floor of a 3-story building. You obviously got the ceiling above you for the 3rd floor. Let's say now we're on the 3rd floor. That second ceiling, or that 2nd floor ceiling, now becomes your 3rd floor essentially, if that makes sense. So I don't know, I guess I'll draw it like this, but let's say price is trading down here. You got your ceiling right here, there's your ceiling. Okay, back down to the floor. Okay, we broke the ceiling, we're right here, we broke the ceiling, and now if we come back to the previous ceiling, that ceiling will now serve as support. It's unlikely on that first retest is always the most key. So then that's going to serve as your new support, and that's how buying works. Buying works like that because fear versus greed, fear versus greed, excuse me. So, but yeah, that's basically an SR flip defined, and why I like it and why I call them SR flip, break and retest. It's basically the same thing essentially. So that is what we're looking for on Moderna. So our stop is going to be a break below previous supply. So yes, I think this is certainly going to come back to previous supply. And I think it's going to probably test demand one more time before heading higher. But that is break and retest, really. Let's go look at Monster. I did not choose Monster today. Monster, it kind of gapped up. It gapped up. So here's your gap fill right here. Here's the close. We never came back down to the close. So I don't really care. When it gaps up like this, especially at highs, and the large top wick is pretty indicative also, but don't love it. I'm just going to leave it. I'd rather see, I don't think it's going to be leaving the station. We're already pretty extended here. We've had a pretty big move. So when it gaps up like this and it doesn't correct itself, and it's kind of, it looks bullish, really it does, but it's kind of indicative weakness because it just leaves that nice juicy gap open for sellers to come back down and fill it. So once this fills, then I'll reevaluate, but I really could care less from now on. So also, it was pretty extended from my demand zone, so I'd rather, it was gapping down actually in pre-market, but then clearly just opened up here, so whatever. But pretty extended from my my buying area, and I obviously want the most risk or least risk as possible. Of course, I'm going to be inherently holding more risk here if my stop's going to be down here than I would if I entered, let's say, in demand right here. If I entered at obviously 59.84, my risk is only going to be about 30 cents down to 59.51. Whereas if I entered up at open at 60.68, I'm carrying a lot more risk right there. So just kind of unwilling to do it. Just I could find something better, so that's why. MCHP did exactly what I wanted it to do today. This is just a great sell right here. So if we look at the 4-hour, I have that supply zone drawn. Why do I have that supply zone drawn right there? Well, Let's remove that. Remove it. So same thing as I was talking about. So here is your price. Here's your price floor. If we go back to right here, there's your price floor right there. Nice clean breakout right there. Yes, it does. It certainly does look like it's. There's your price floor. So we're gonna make that green. There's your supports. Okay. Came back down. Good. And then of course we just happened to gap up right into previous support, and if we broke down that support will be new resistance. So there's your SR flip. So you had your previous support over here. Came right back. Well, first you broke down, and then you came right back to it and found it as supply. So great sell off today. Exactly what I want to see, honestly, here. So I hope we test the demand tomorrow, and then I think that 90 level is going to be a solid level on this. I think if we do end up reclaiming this, so right now this is probably resistance as well, since we rejected it right here and then right here, so we're going to make this red. So those are your two levels. 90, 92 are going to be your big levels. I don't think I'd be longing this sub 90. I'd probably want a 92 rejection and then a 90 retest to go. Something like that, but I don't know. We'll see what we can get, but I'm glad that this is back at demand right here. Why is this a break and retest? Excellent question. Let's define it. Let's get rid of these stupid random lines. Why is this a break and retest? Carson? Oh, perfect. Why is this a break and retest? So here is your rejections, and then here is the sell-off that it had, and then here is the break. Here's the break right here. And did we have a break on high volume? Well, we gapped up right there. We gapped up once again. Was it on high volume? Yes, it indeed was. It was on high volume right here. So that is good. That checks out your break heuristic, I guess you could say, your break rule. I need to see a break on volume. Yes, you did break it. We did gap up, so that's kind of indicative of a sell-off coming. But did we have a low volume pullback? Well, here's your break, and then what we have? About 5 consecutive falling volume days, and then we had this massive green day on Friday. So I'm going to be looking for a retest of this structure right here. I'd be looking for, we're clearly in a bearish structure right now, so we're kind of flagging like this, and we need, I could even see one more rejection right here, maybe come down double bottom, and then we go. I could certainly see that, but I don't know. We'll see. Still looking long here. I don't know. I don't even know what it's doing post-market, but okay, yeah. Same thing with QCOM as well. I think we're going to take a look, but I'm looking for another demand test and then eventually a break above 90 here for this to confirm. And then 92 especially. 92 is also resistance right now. So 90, 92 are your levels, so watch out for resistance above 92, and I'm pretty confident that this sees more upside. Same thing with QCOM. QCOM did pretty much the exact same thing. Let's go look at where QCOM rejected and why it rejected. So if we go look at QCOM, it ended up perfectly staying within this 4-hour little falling wedge it has going on right now, but came up and retested previous. Here's your previous support over here. So back here served as support. So here's your support. You rejected it right here on Monday, March 11th. You found support here again, and then we did end up breaking down. So since we did end up breaking down, we retested it right here and sold off, but we even came all the way up. We gapped up and rejected the piss out of it today. So this will probably be your supply zone for now. There's your supply zone. So anything above 172, and I am liking this long, but nice sell-off today after it gapped up into supply. So why is this a break and retest? Well, we have our nice rejection. Let's get this off so we can just make it a little clearer. Yes, we can get rid of these arrows because we know it's high volume, don't need that. This is a break and retest because, let's get rid of this. I don't need post-market on. There we go. This is a break and retest because we have our previous rejection right here. So here's your supply zone. Did we break it? Yes, we certainly broke it on high volume. Here's your break. Bang. Here's your break. Bang. Okay, did we have a low volume sell-off? So here's your sell-off right here, about 6 trading days selling off. Did we have any very high volume sell-offs? No, we did not. I mean, here's your semi-high volume kind of inside bar day, but there's no specific high volume spikes or anything that I'd be terribly concerned with. But you did have this high volume day coming in on Friday as well. So I'm looking for something above. So right now, well, I mean, we're struggling to get above. The 4 hour barely closed. I mean, the 4 hours struggled to get above 170. And then I think 172 is going to be your big level. So 172 right here, that's going to be a big level for price to clear. So I think 172, and I'd be getting long on this name. So we do have some unfilled gaps up here. I mean, we have an unfilled gap right here. We have an unfilled gap right here. So I definitely think this is, going to see at least a little bit of upside before this fully breaks down, if it does. So that is what I'm seeing on QCOM and why it is a break-in retest. So again, if we delete these, if we even go just like this, purely like this, I mean, this is just a classic break-in retest. It literally on the dot closed today. So here's your close on Monday, March 4th, and then here's your close today on Monday, March 18th. So we're looking for previous rejections, previous supply to be turned to new support over here, and then we'll be using that level to basically risk off of. Heading into the rest of the week, we're really only watching. Okay, actually, I lied. I did enter one more position today. I did enter a starter on SYY, so let's do that quick. Actually, I'm going to pause it, and I'll just fill out the box. Okay, we got our box up there. I can't believe I completely forgot I entered Cisco today, but we entered Cisco right at end of day. So here's our box, but we got our current unit size of 1 unit. Our date of entry is 3/18/2024, so today. The unit size defined, so we got 1% of the account balance, and then entries on May 17th. Or, excuse me, entry, dude. Entry. No, my entry is not on May 17th. My entry is going to be, I think it was about at the close right here. I entered just at the close, so we'll go 8066. I don't know that for sure off the top of my head. 8066, just roughly. There we go. Okay, so the rest of our box. Current unit size, 1 unit, went through that. Entry 8066, initial stop is 8056, I mean 10 cents. Initial stop, it won't be actually 8056. Technically it's 10 cents of risk, but it'll be a close below. I'd like to see a close below. I'm a big close below type of guy. I think it certainly can stop hunt and wick down, but I need to see a definitive close below my level. And that has happened quite a few times, and it has worked out in my favor, so I do like that. So adding level is 81.23, so why is my adding level 81.23? If we look at where price opened right here, 81.22. Okay, so it'll technically be 81.22. But we have yet to close above 81.22 right there. So if we get a close above 81.22, that'll be when I add my first additional unit. So trailing stop, when we do break, if and when we do break 81.22, it'll be the 9 EMA or structure, whichever is first, and then the risk-free position will be put on once initial capital is at 50% of profits or more. So that is what we got going on Cisco. Let's get into the technical analysis here. Why did I enter Cisco? Well, this is a classic break-in retest. This is what I'm all about. So why is it a break-in retest? I always like having my line with markers on right here. So we had 1, we had 2 solid rejections right here. So this used to be former supply. So if we turn on our replay, before the break, let's go one more day. So this is our supply zone. This is our resistance. This is current resistance right here. This is our resistance. So this level used to be resistance, and then we'd be looking for a break. So this looks like a very bearish candle. You have your rejection of supply, you have it on high volume, and then you have your break. Just an FU to bears, just massive green candle, bullish engulfing, and then we completely close above the supply zone right there. So what used to be former resistance, your ceiling, if you will, let's copy and paste that. What used to be former resistance that we now broke above, and did we break it on volume? Yes or no? Yes, I would consider this to be break on volume, so that is good. I would not want to see some sissy volume breaking above resistance like that. there's your break on the 4 hour, and here's your break on the daily. And then on the daily, what did we have? We came right back to previous resistance. Excuse me, this one should be green. Right back to previous resistance that we just broke above on high volume. Well, we would then consider this new zone to be support, barring confirmation. Okay, I did not enter on confirmation yet, so that's something that I did fail to execute on. But a confirmation would be maybe a daily close that we close higher and then use it as support or bounce off of. So this is barring 4 hour confirmation, or not 4 hour confirmation. This is barring daily confirmation. Does that really gap up? Was that real? Okay. Anyway, I mean, I think there's something to be said for getting a good entry versus waiting for confirmation. If you're sized correctly, I think there's something to be said for entering at a great risk position. So like obviously with this one, my risk essentially is 10 cents, even though it can certainly close much below on a daily close below the level. So I guess it's kind of a trade-off if like let's say this does confirm and we open up red at demand tomorrow and then we close at 81.19. That would be a confirmation of long, but then my entry would then be 81.19 and I'd be carrying all the risk from down here. So is it worth to carry more risk and it's unconfirmed, or have a better entry unconfirmed? I don't know. I should probably think about that a little bit more. But so why is it a break and retest? I mean, you have your two rejections right here, you break it on volume, and you come right back to this zone. So that's why it's a break and retest. Let's go look at it on the 4 hourly. I mean, it's even cleaner on the 4 hour. You have your rejection failed to close above, rejection failed to close above. You break it, and we're right back. So if we're right back, that previous ceiling we broke on volume, now it turns to a new floor, and we are willing to risk off of that floor. And I was willing to risk off of this floor just because of yesterday's high volume. And I actually also do really like this on the higher time frame as well. If we kind of hide that a little bit, zoom out a little bit, you have your obviously massive weekly candle right here. And if we've been trading within it for 1, 2, 3, 4, 5, 6, and this is about to be the 7th week. And then we do see increased volume on the weekly attempting to break what is resistance. So our resistance is clearly going to be a weekly breakout above whatever that closed at. So if we hover over it, that might be in the cent. Close was 81.48, which is on the cent. So that'll be our weekly breakout. But actually, did we test that to the dots today? I don't think we did. No, we did not. So maybe 81.48 will be my my adding zone instead of 81.23. So that's what we got for Cisco. Anything else? I don't think so. Yes, I was so close to pulling the trigger on DDOG today. I probably should have. Let's see what it's doing post market. Probably should have. Okay, we're not gonna get anything post market, but I don't know. This one was so difficult for me because if we turn this on, I mean, here's your break level. So here's your level that I would have been risking off of. We just hadn't really broken it yet. This was obviously an inside candle trading day. I'm just not thrilled with the idea of, I'm more of a, let's see a little bit of continued downside and then get the then get the retest versus a immediate retest go, I guess. Kind of. In certain scenarios. But that would completely just, well, yeah, I guess. No, I'm going to take that back. Kind of. But I think the ideal short on DDOG would be up here, around like 123.68. I think that's going to be the ideal short. I just don't know if it's going to break it. I mean, it certainly could. It certainly looks extremely bearish. Yes, it looks extremely bearish. I just didn't know if it was ready yet. So I ended up not playing it. We're still fairly extended from the 9 EMA. I didn't love where it closed today. I actually wish it was going to close higher, but I could certainly see something like this here, continue downside. I mean, it is downside, so it moves quicker, but I also could see some kind of reclaim of this level and then even retest, get a little bit more off right there, make some kind of like double top, and then we go. I thought that was a little more likely, so I just didn't care to I didn't care to play this just yet. So that is DDOG on CVS. CVS I was close to entering today. I just don't think it's ready yet. Actually, that closed much higher than I thought it was going to. Very interesting. I didn't think it was going to continue higher just because of this hourly candle right here. This hourly candle, we rejected the breakout on high volume. So here's your high volume rejected breakout. You can see it right here, which is very rare for during the day. Like during the day at noon, especially if you have a high volume breakdown like this, pretty indicative of, like, you could say putting on the brakes, if you will, like putting on the brakes for price to come back lower. But yeah, I didn't like CVS just because of that, and it was nearly bullish or bearish engulfing, and it did close back down below that structure right there. So obviously it ended up closing much higher, and we're producing kind of like a little hammer on post market. But I don't know. I thought that was pretty interesting. I don't think it's very corrective for a move to be engulfing this can. I mean, there's probably a reason we're literally right at it right now, because probably getting some selling going on. But I did not love it just because of that reason. I don't think it's ready yet. I'd like to see some kind of pullback again to 76.50 before we go any higher. So a fat gap down tomorrow, open up at demand. I mean, come on, that would be unbelievable. So that's what I'm hoping for on CVS. But yeah, that's what I got. That's what I got for CVS. Another one I'm looking at is ELV. ELV kind of looks scary now that I'm looking at it. I don't know. I mean, it's been... I don't think healthcare is ready yet. I don't know. I haven't really checked the sector yet, but it's very tight within this 4 hour, and I'd like for some kind of definitive pullback before this goes any higher. But I mean, a great SR flip right here. So who knows? I don't know. We got our. Let's go look where supply and demand is. Where is this? So we clearly got supply up here. Here's clearly going to be your supply. Close right at it, and then it couldn't even continue any higher today. And realistically, I mean, demand's going to be all the way back here. So if it can come all the way back down there, then I'd get interested if it came back down here. But I'm not interested right at supply. I don't want to be entering supply. So there was one more that I think I was looking at. DDOG, CVS, ELV. I think that's about it. I think that's about it for today. That is what we got going forward. We got SYY, and we have Moderna as our two positions right now. So thank you so much for watching. I appreciate it greatly. As always, please like, subscribe, and comment. It helps out greatly, and I hope you have a great rest of your day. I'm looking forward to the rest of the trading week. Just got my one of my stupid textbooks for this semester, a good old conceptual guide to taxation of partnerships. Some really good fun material right there. I hate tax. It sucks. Yeah, that's what I'm going to be doing for the rest of the day. So yeah, thank you so much for watching, and have a good rest of your day.